You put up with a lot and kept your outperform. Really, the only time you brought down some numbers was on delivery news, right?
Yeah, I mean, look, it's really been a tale of two cities because if you look at the transformational growth story, that continues to be intact for Tesla despite the dark storm, but it's really Musk. I mean, that's really been the black cloud over the story here in terms of, and I think even when you look at the trial, it's just another situation where it's been a black eye for Musk and a black eye for Tesla.
So today, outcomes today are meaningless to the stock at this point?
Yes and no. I think, him on the stand, there's always a lot of sort of wild cards that could take in. I think it is a frustration from an investor perspective because you want to focus on fundamentals, price cuts, China, but Musk continues to sort of insert this narrative, and I think this is a good example, combined with the Twitter situation, still no CEO, and that has been, lingering overhang over the stock.
Speaking of price cuts, you've got this new survey work looking at EV consumers in China who appear to be responding pretty well to the prospect of maybe a cheaper Tesla in that country.
Yeah, we did that this week. Over 500 consumers in China, across EV. It was really to try to gain, okay, what's really happening on these price cuts, and especially against domestic competition, BYD, NIO, and others. Look, 3 of every 4, 75%, plan to buy a Tesla in 2023. That was even over BYD, which I think is pretty important. And it shows they're battling at domestic competitors. And that price cut, you look at that, they ripped the Band-Aid off. 70% said now much more likely to buy a Tesla. Shows that poker move, I think, is working out of the gate.
I've heard a couple of different. One idea is, why would you want to get into an industry where a price war is possible? On the other hand, if they're choosing between margins and units, maybe they're wise to go after units, right?
Yeah, I think right. And I think you've seen it in the stock. The reason the stock's up, call it 25, 30% from lows, is because they're putting an iron fence around that install base, as well as we're in the second inning of EVs. The last thing we want to see is them sit there at a higher price point and lose, especially with competition coming from the 313 area code, the Detroit stalwarts, and others. So for the street's perspective, sacrifice margins right now for volume, and I think that's really been the important move.
Overall, you cover a lot of names in tech, and we've had a lot of people talk about being cautious this year and the Fed and the debt ceiling and earnings recessions, but you think tech full year could have double-digit gains, right?
Yeah, the New York City cab driver's bearish on tech right now. and I think it's easy to yell fire in a crowded theater. Our view is that they're doing the headcount cuts they need to do. Numbers in terms of whisper numbers from a buy-side perspective, 8 to 10% below street numbers. I think it's set up where you're going to have a lot of these better than feared. And you look in Nadella, Cook, and some of these other, and they're going to be able to navigate the storm. So my view is that tech stocks are up 20% plus this year. We believe FANG names could be up 30% this year.
How are they going to do, though? How are they going to lay off a significant number of employees and then turn around and invest in areas of innovation where they're facing competitive threats like AI?
It's a great question, but look at Nadella and what's happened in Redmond. They're cutting costs in hardware and some of these non-strategic areas, but yet you look at ChatGPT, the $10 billion investment, doubling down artificial intelligence, because Microsoft, Amazon, Salesforce, and others, they'll cut costs where they need to, but this arms race is going to continue to play out in tech. You're going to see really what I view as winners and losers emerging from tech in what we're seeing today.
Do you cover Alphabet?
Yeah, so look, and to me, my view on Alphabet here, you needed to rip the Band-Aid off like we've seen across tech. And I think the reaction that you're seeing in Alphabet, so look at Microsoft since those cuts. Look at Meta since those cuts. Street wants to see these companies rip the Band-Aid off, navigate through the storm, and I think that's an important thing.
That's interesting because the bear thesis I've heard on Alphabet is they're going to have to match whatever Microsoft's putting together on AI, and that's going to be expensive. It's going to weigh on operating margins, whether or not they hire less, more, the same year on year.
But look at Gates' biggest regret is in the mid-90s during antitrust, didn't invest in social, didn't invest in mobile, and ultimately lost out on trends for the next 2 decades. So I think these companies have learned from that, and that's why this Game of Thrones is going to continue to play out in artificial intelligence, cloud. And I think the theme over the next few weeks is tech. Lowered guidance, stocks up, better than feared. I think it's as underweight as I've seen investors in tech since 2009.
Do you think the entry point for consumers when they go to the internet, the way Google has owned for so many years, could actually change? You think they lose share of that because of this new technology?
Well, I think it's a shot across the bow from Nadella and Redmond, and then that's why they're going for it. And look, Google continues to really have that ironclad, understanding of the market, and no one could deny that. But you're starting to now see some market share potential gains, and it just shows Microsoft's not going to sit there in the right lane. Left lane of innovation, that's what Nadella's going after.